This video, we're going to look at discontinued operations. Sometimes a company will sell or shut down certain business components or operations. They're not going to close the entire company, just certain parts of it. Typically, this is going to be either a major business line or a geographical area. For example, a company may decide to shut down all their operations in the Southwest region, or a company may decide to shut down a particular line of products, such as a particular make of a car. That would be an example of discontinued operations. The company may decide to shut down the operation, or they could decide to sell the operation. GAAP requires discontinued operations to be reported separately in the income statement. We're going to look at two situations. In the first situation, the company will decide that they're going to discontinue an operation, and the operation is sold or discontinued during the period. The second situation is that the company decides to discontinue an operation, but it's still held at the end of the accounting period. They haven't gotten rid of it yet. So depending on what happens, the way that we're going to look at reporting these discontinued operations are slightly different. When the discontinued operation is sold, the company is required to report revenues, expenses, gains, and losses from the component from the beginning of the period until the disposal date. So a lot of times company may decide to sell the operations during the middle of the year, and they may hold it for 2-3 months and sell it. However, you're still required to report revenues, expenses, gains, and losses from the beginning of the period until the date of disposal. So just keep that in mind. It's not just for the 3 months or whenever since you decided to sell it, it's for the entire year until the date of sale. Then you're also supposed to report any profits or losses from the sale of assets that were used by that discontinued operation. So the discontinued operation has some assets that they were using. Those assets will be sold, and the company needs to report any income or loss from that sale of those assets. On top of that, of course, any related disclosures will be reported in the notes to the financial statements. Let's take a look at an example. In this example, it says, on April 1, 2021, ABC Company's management decided to sell one of the company's divisions. On July 14, 2021, the division was sold. Then they gave additional information. It says from 1/1/21 to 7/14/21, which is the date of sale, the division had $1 million pre-tax loss from operations. The division's assets were sold for $5 million. These assets had a book value of $2 million. Then they also said the company had income from continuing operations of $10 million, and the tax rate is 25%. They want you to present this information in the income statement and then calculate the net income for the year. So here is a format of an income statement that has income from continuing operations shown. The top part we're not going to work with because we don't have the information for that, but they have given us income from continuing operations, and that's where we're going to start, in this line right here. And then we'll work our way down. First, let's work on the calculations necessary to report the discontinued operation. We know that we have to report two things. First, we need to report all the revenues, expenses, gains, and losses from January 1st of 2021 until the date of sale, which is 7/14/21. They've told us that the division had $1 million of pre-tax losses. So let's go ahead and put that down. We've got a loss from discontinued operation of $1 million. I'm going to put that in parentheses so you remember that that is a loss. So that's the first thing. The second thing we need to look at is the sale of assets. So gain or loss from sale of assets. We know that our sales price, they told us that they sold those assets for 5 million. So we know that the sales proceeds were 5 million. And to calculate a gain or loss on the sale from previous classes, you know that you've got to subtract the book value. How much is the book value of those assets? They told you that the book value of these assets are 2 million. Sales proceeds minus book value gives you gain or loss on sale. So in this example, we have a gain of 3 million. So now you've got the two things that you need. You have a gain of 3 million and you have a loss of 1 million. So we're going to report this in the income statement format. So the format we're going to follow is this part. That's the part we're going to follow. We start with income from continuing operations. So bear with me. Income from continuing operations. I am going to abbreviate since you have the format here. They told us that income from continuing operations is 10 million. So let's go ahead and put the 10 million here. Then we list out our discontinued operations. We've got a gain in this case. So let's combine the two. What do we have? We have a gain of 3,000 and a loss of, gain of 3 million and a loss of 1 million. That's a total gain of 2 million. When we combine these, that's a total gain of 2 million. So we're going to say gain from operations of discontinued component and in brackets including gain of 3 million and that total, and I know I don't have room here, but that total is going to be 2 million. We're going to indent that. Again, that says gain from operations of discontinued component, including a gain of 3 million. The wording here is slightly different because in this example, I had shown you what the wording would be if it's a loss, but it does say in this note here that if there's a gain from operations, there will be an income tax expense and the wording will be slightly different. So we've got a 2 million gain here. Then we have to show our income tax expense related to this gain. So since the gain, we have an income tax expense. And that expense, to calculate it, you take the 2 million gain. And they said the tax rate is 25%, so you just multiply that by 25% and you get 500,000 to be your income tax expense. So let's go ahead and put 500,000 as the income tax expense. Remember, expenses are subtracted from the gain, and then you extend out your income on discontinued operations to be equal to 1,500,000. Sorry, it's slightly out of line, but that's supposed to be income on discontinued operations of 1,500,000. that gives you your net income. And your net income for the year is 11,500,000. And what we did for that was added the income from continued operation and income on discontinued operations to get 11,500,000. So that's it for this question. It says present this information in the income statement. That's what it's going to look like in the income statement. What is the net income for the year? It's 11,500,000. That's it for this video. I'm going to do a separate video for discontinued operations when it's still held for sale. Please let me know if you have any questions.